Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look at the gold market. Well guys, situation on the gold market mostly stands the same as on Friday, as we have discussed in the beginning of the Friday session. Not some big changes have happened here, but the situation slightly has changed on the weekly chart. So if you will read our weekly research, you will see that the market has formed some bullish patterns that point on possible further upward action. So on the weekly chart, it looks like the retracement. On the daily chart, this could take some shape of some, I don't know, maybe it's called a bullish trend or something of that sort. But anyway, the upward action could continue on the gold market. Here, guys, I don't have any monthly pivots because market already has passed through all of them. Market has taken out the monthly pivot to resistance 1, pivot to resistance 2, so it just indicates that market stands in the new bullish trend on the daily chart. And weekly chart points that the possible nearest destination of this upward retracement stands at 1150 approximately. There also stands the weekly overbought area. Meantime, on the daily chart, as we have estimated already, we see that market also stands at the resistance. This is probably 50% resistance. I don't have it on this chart, but here we have the 50% level right here and daily overbought. In fact, on Thursday, we have discussed that market has formed Napoli bearish daily stretch pattern. Stretch is the combination of the fib level and the overbought or oversold. In our case, this is bearish stretch. And usually, the result of the stretch is a retracement down. I have said millions of times already that stretch is a bit contradictive pattern. It's a bit difficult for trading and tricky pattern, and it demands some experience of trading because, in fact, stretch pattern initiates the action against the major trend. As driving factor for this action, mostly the overbought and strong resistance, this action usually very choppy and sloppy because market moves against the trend, so it moves against their major direction. That's why this action is very volatile. And this is not our primary task, primary object to trade this stretch pattern. Mostly, we use the stretch or trying to utilize it in our favor to get the better opportunity for entry on the long side of the market. And right now, we think that the 1085 area is the area that potentially attractive and comfortable for us for a possible taking the long position. That's why particularly this level we will be watching for as the potential area for taking the long position. Usually when the market forms the stretch pattern and market generally hits the overbought, it has the tendency to show deeper retracement because overbought makes useless nearest fib levels. Because the resistance is very strong, so market usually shows the tendency to show deep retracement. But for gold market, there is the feature that it likes to show deep retracements. Usually for the gold typical is the 618 retracement. And also gold market likes to retest very important significant support resistance areas and extreme points. We have seen this many times previously when we have traded the gold market. That's why the 1085 area is particularly this kind of area that could be retested by the gold market. So currently, guys, based on the situation that we see, we do not abandon the idea of the possible two-leg retracement. We think that it's still possible, the compounding downward retracement. And on the 4-hour time frame chart, another signs why this could happen. First of all, guys, based on the current technical picture on the 4-hour chart, market has no reasons to continue move higher. here, I mean in the short-term perspective, within this current retracement, because usually market shows slightly new high, so it could start retracement down, but then show some slightly new high, or show some wash and rinse or something of that sort. When it has the target, some extension or some pattern target slightly above the market. But here we have the market already has completed A, B, C bottom, 1618 target. It has been hit. That's why probably market should not show new top here. If we will take a look at this minor extension that's now is forming here, I will increase the scale. So as you can see, the market is forming here A, B, C pattern. On the hourly chart, you could see it better. Even you could even recognize here some kind of the head and shoulders on the hourly chart. Probably some others could recognize here this first possible bread and butter sell or something of that sort. But to be honest, guys, we absolutely don't care what will appear at the top. Whether it will be head and shoulders, maybe it will be some other pattern. What we really do care is that to get market right here. And based on this ABCD pattern that we see is forming right now, it should lead us precisely to the 1085. So because the 100% extension of this A, B, C, top, D pattern stands at 1085. This will be also agreement with our confidence support 1088 area. And take a look, that is the major support resistance zone on the gold market. The one risk that we see here that probably could appear is the possible some kind of the butterfly maybe here to the upside. So market could form as a reversal pattern butterfly. But in this case, it will not change our setup because we do not have any plans to trade it on the short side of the market. So we do not have any plans right now to take the short position. Because only in this case, the butterfly could become the menace for us, for our position. For example, if we will place stop here, disappearing of the butterfly will be the hazard for us. And if the market will not turn to the downside immediately. But we do not have any plans to do this. We just need to get market here. So in what reversal pattern will be formed here? We prefer to get the direct ABCD pattern right now. But if market will form the butterfly and then turn down, well, this will be also normal. If we'll take a look at the hourly chart, this could be probably some kind of the butterfly, as you can see. It is possible. But returning back to discussion of this ABCD pattern, and already the fact that market has hit major 1618 extension, also guys taking into consideration this combination of the fib level and daily overbought. By the way, double repo has completed the target, guys. So 50% resistance, it's minor minimum target that should be reached by the double repo, and that has happened. So taking into consideration existence of this resistance, and this market already has completed the major target, appearing of the butterfly here is not quite logical. So that's why it's really probable that market could turn with ABC action immediately. But anyway, as I said, this is the minor object for us. For us is the most important thing to get market around 1085, where we will trying to assess the attractiveness of the taking the long position. Whether we still will have the bullish context around 1085 when the market will appear in this area. So that's our major task.